Axel, thank you very much for joining Energy Live News. Of course, we're going to discuss about the new report that was published today by Carbon Tracker, saying that the world's largest listed oil companies will undermine global climate goals unless they plan for a major decline in production. Can you tell us a little bit more about that?
What the report is really trying to say is that if we want to hit 1.5 degrees of warming, which scientists are becoming increasingly unequivocal that we need to do that to have a safe, climate safe future. If we want to hit that goal, the IEA, the International Energy Agency, has been quite clear that we can't develop any new oil and gas assets. I mean, if you take that at face value, that's obviously a massive challenge for the oil and gas industry, which relies so heavily on developing new assets to maintain production. So what we find is that for half of the world's largest 40 listed companies, their production would decline by at least 50% in the next decade. So it's a huge drop. And most of the companies that claim to be net zero 2050 still don't recognize that they need to reduce production at all. So this is obviously a very stark implication.
My next question comes from that point that you just mentioned. The report warns that climate targets would mean that oil production needs to be cut by 50% or more by 2030s. How possible you think this goal can be, judging, by the current unstable financial conditions and environment?
Yeah, it's obviously a major challenge for companies, especially for their financials. They would need to be prepared for that future. It's very challenging in terms of their valuations, in terms of their existing debt levels, and how they can be prepared for that for a future with much lower revenues from oil and gas. Now, that's why we're really pressing on the point that it's important for investors who have money in these companies to start pushing them to have strong transition plans and start to act and move today to diversify into to either diversify into other revenue streams, like, for example, renewables, like some companies are doing, or to start deleveraging and to perhaps return capital to shareholders instead of investing in new assets that may risk becoming stranded in the future instead.
I want to continue with another, staggering and a very interesting figure coming from the report, saying that companies risk wasting more than $1 trillion on projects which will not be, competitive in a low carbon world. Can you tell us a little bit more about that figure?
Yeah, of course. So this figure is based on the idea that if companies continue to invest along a sort of business as usual pathway, sort of continuing to sanction projects in a manner that they've been doing in the recent past, then if the world does actually decarbonize instead and fossil fuel demand falls and fossil fuel prices fall, then companies will risk investing about $1 trillion into assets that will not be competitive and that will risk becoming stranded. And so again, that's a very important point, that companies need to think hard about what projects are compatible in a low carbon world, and whether that capital can be better used instead.
How optimistic you feel about this energy transition and about all these big and huge oil companies that they are going to accelerate, their pace to a low carbon future?
Well, I think the benefits and potential of low carbon technologies are very evident. They create lower energy costs for consumers, cleaner air, less dependent on imported energy, and so on. So from that perspective, that I feel a lot of optimism about these technologies. But of course, for companies that rely on fossil fuels, they stand before a very, very big challenge. In terms of whether I'm optimistic about whether they'll move, well, I think positively, there's this more pressure now coming from investors and other actors onto companies to make sure that they're acting. And that's really why oil and gas companies have been announcing these new pledges in the last couple of years and new sort of transition plans. It's because of the pressure that they feel from investors and shareholders. And so we hope that our report that's coming out today will be good ammunition for investors to continue those efforts and to continue to pressure companies to do more and do better.
I'm going to bring one of the main points from the supporters of the oil and gas industry, that they are saying that oil would play a very important role, even in a net zero world, even in this energy transition. What's your take on that?
Yeah, I think most low carbon scenarios still see some use for oil in the future, but that's mostly in non-combustible uses like plastics, for example. But really, I think assuming that oil demand will continue to rise, it will be stable for next 1 or 2 decades, which many companies still do, it's an extremely risky approach. If you think about the power of low carbon technologies to displace existing fossil fuel technologies, it's staggering, really. And I think companies that don't realize that risk becoming incredibly exposed down the line if they act too slowly.
Focusing more on the UK's efforts to decarbonize major industries, what's your opinion on the strategies that are being followed till now?
At least from the perspective of, how they're approaching oil and gas, there's some talk about using, for example, carbon capture and storage to help the industry transition a bit slower and perhaps to justify new investment in oil fields. That's something that we're very critical about. Relying on these sort of unproven, untested technologies and hoping that they can rescue the industry down the line is a very risky gambit. And I think will sort of exaggerate the risk that assets become stranded instead. And so I think it's important to not rely on those technologies and to instead focus on reducing the size of the industry as quickly as possible.